Hey, what's going on YouTube? And welcome back to Tech Conversations. I am your host Guillermo. It is August 26th. Hope you're all having a great day today. Today I want to talk about Webull. Today I finally got approved for a margin account. Took about 2.5 weeks. But with a margin account, I am now able to talk about some more advanced option trading strategies on Webull. And so I figured today we'd start by talking about how to enter a call debit spread on Webull. A call debit spread is also known as a bull call spread. So before I get into that, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. And again, very important, before you ever enter any options trade, make sure that you know how to close it. Make sure you know how to exit an options position before the expiration date, because most of the time you're going to want to close before it expires. Now, if you're not using Webull yet, you can use the link in the description below to sign up. You'll get 2 free stocks valued up to $2,000 by using that link. And again, I think it's important to have multiple brokers, just because a lot of the times we see some broker have an issue, and if you have multiple brokers, you can just use a different broker for the day to trade. Also, of course, you have more day trades, especially if you don't have unlimited day trades. You can have more day trades by having more brokers. It also allows you to trade extended hours. So on Webull, you can trade 4 to 9:30 a.m. Eastern time and 4 to 8 p.m. Eastern time. So you can kind of get in before the rest of the crowd if some company announces some big news after hours or before the market opens, things like that. Now, for today's video, I'm going to be using the Webull desktop app, and for all the videos going forward, you basically have to download it on their website. So go to Webull.com, go to download, and you can download it here for Mac, for Windows. This is their new Webull Desktop 5. Very nice, and I'm going to show you that here. Now, one last thing, guys, before I get into this. In order to be able to trade spreads, you do need to have level 3 options. And to qualify for level 3 options, you need to have a margin account. And that's why I'm very excited that I finally got approved for a margin account. But as you can see here, you can kind of see what level you need to have to do certain strategies, and then if that strategy is allowed on a certain type of account. So as you can see, for credit spreads, debit spreads, you need level 3 options. And as you can see, you can't do that with a cash account. It needs to be a margin account. So just keep that in mind. I know a lot of people will ask why they're not able to do this. That's probably because you don't have a margin account. And once you do get the margin account, you do need to reapply to have level 3 options. Okay, so anyways, now let's get into the actual desktop app here and take a look at how we can set this call debit spread up on Webull. So here's the desktop app, and right now we're on this watch list tab. So let's go over to the stocks tab here. So first of all, this is the stocks tab, and as you can see, we're currently on Apple stock, so AAPL. So what I want to do is I'm going to use Facebook for this demo. So up here you can search and take a look at different stocks. So I'm going to go to Facebook here. So let's click on that, and now we're on Facebook here. As you can see, the chart for Facebook. Now, to get to the options, there is this little tab up here that has multiple different options like news, financials, analysts, really important information. But what we want to take a look at is the options tab here. So we click on this. This will show us the options here. So now we're on the options for Facebook, as you can see here. Now, the very first thing you do anytime you go to enter an options trade, of course, is you start by choosing an expiration date, okay? Now, here, each expiration date is kind of on its own. So what you want to do is you want to collapse this right here. This is collapsible. So you collapse this, and as you can see, this will have all the expiration dates available. As you can see, they're all kind of their own little section here. And so since August 27th is coming up tomorrow, I'm going to go ahead and choose September 3rd, just so that it makes a little bit more sense here. It actually tells you how many days left for that to happen. So 8 days left until September 3rd comes. So what we can do is we can expand this, and this will show us all the options that expire on September 3rd. And so that's the expiration date we want to choose. And I leave all of the other ones as collapsed so that you don't get confused and end up choosing the wrong expiration date. So now we've set our expiration date as September 3rd of 2021. Now, the next thing you may notice is that there's a lot of strike prices here. I mean, it literally goes from 220 to all the way 500, right? There's a lot of strike prices. Again, this can get very confusing, very hard to read. So what I'll do is I'm going to switch the number of strikes here to only 20. And this will make it a little bit more compact, a little bit more readable and easy to navigate. Again, I don't want people to get confused here and end up choosing the wrong options or things like that. So I do that. And then next, of course, this is a call debit spread. And as the name suggests, we're dealing with calls. Right now, we're seeing both calls and puts. Again, I don't want you guys to get confused. So what I'll do is I'm going to go to calls here just to only see the call options, okay? So now that we've done that, we can start getting into this strategy. Now, remember, how does a call debit spread work? A call debit spread is when you buy a call option and then you sell a call option with a higher strike price. So it's very much like a long call option, right? But by selling the call option above it, it's basically helping us pay for the cost of that long call option. So we're going to enter this as a debit, hence called debit spread. And ultimately what's going to happen is, again, it's very much like a long call option, but our risk will be reduced because we're selling that call, and it's obviously reducing the cost to enter, but our profit will also be capped, right? Unlike a long call option that has unlimited upside potential. Now, what we want to do here is we want to go up here to the top left. See how this says single? This is telling us single options. What we want to do is we want to click on this. We want to click on vertical here. Okay, now vertical, this is a vertical option, right? And vertical basically just refers to a strategy where you're buying and selling multiple options that have the same expiration date, but different strike prices. And so call debit spread obviously falls under that because we are buying and selling a call. They're expiring on the same date, but they do have different strike prices. So this is also called a vertical spread. So that's why we chose vertical here. Now let's take a look here. This is going to show us different vertical spread ideas, basically. Kind of sets it up for you, which is kind of nice. And we can modify these as well. So again, remember, with a call debit spread, what you want to happen is for the price of the stock to be higher than the strike of the call sold at expiration here. So let's take a look here. So what we're going to do, we can actually change the width of these, right? So let's say we want to enter a call debit spread that has a width of, let's say 250, right? The strikes are 250 away from each other. We can actually go ahead and click on this, and it gives us an option to do that. So we can do 250, and now as you can see, these options are 250 away from each other here. And so we're going to go ahead and click on one of these. So again, since on expiration, we basically want the stock to be higher than the strike of the call that we're selling. I'm going to choose one down here that's already, where the stock price is already higher than the price of the call that we're selling. So I'm going to go ahead and click on, let's do this one right here. So this is the 360, 360, 250, right? So we're buying 360, we're selling 360, 250. So we'll click on this here. So what's going to happen is this is going to show up here, this little widget here, and you can actually, kind of move it around and actually put it in place. I like to have it hovering here, but this is what you're going to see here. So again, this is a vertical spread. This is obviously ticker symbol Facebook, and as you can see, the strike we currently have is 360, 360, 250. We can actually change it here as well if we want. We can also again change the widths that we want here, right? So I wanted to change if I wanted them to be 5, the strike prices to be 5 away from each other, 750, 10, whatever. But obviously I'm just going to leave it as this as the 360, 360, 250. So we'll just leave it as this. And then we have our expiration. You can change your expiration here if you want to change it all of a sudden, but we left it as September 3rd. And then, of course, it gives you quantity. So it looks like just by default, it always puts this as 10. So be careful with that. This is saying that you want to get 10 call debit spreads. We don't want 10. We just want 1. So we'll do 1 there. And then of course you can change this to be limit order, market order. Again, anytime you're entering an options trade, you should use limit, okay? Because with market, you can get a very bad fill and honestly instantly be down like 5, 10, $15. So do limit. It gives you more control over how much, the most it is that you're willing to pay for this trade. And then of course you can modify your limit price, right? So let's say the most I'm willing to pay here is 185. I can change this to be 185 or whatever, right? So it really just depends. But anyways, I'll reset that here. So the mid is 192, as you can see. So anyways, so you can manually input this. And so as you can see, if we take a look here, this is telling us we're buying a call at the 360 strike, right? Expiring on September 3rd. And then we're selling a call at the 362.50 strike, expiring on September 3rd as well. So this is a call debit spread. And if you can click on this little arrow here to actually tell you a couple more things here. So for example, this is telling me, hey, this is going to be a debit. It's going to cost about $185. When it comes to day trades left, you have unlimited day trades. When it comes to max loss, your max loss is 185. That makes sense. Anytime you enter a debit spread, the most you can lose is, or a call debit spread, the most you can lose is what you're paying, which in this case would be 185, and max profit would be 65. And remember, the way you can figure out your max profit is you basically take the difference between the widths. So the difference between the widths here is 250. You multiply that by 100, that's going to be $250. Subtract how much you're paying, 185. So 250 minus 185 is going to be $65. So that's how we can quickly figure out what our max profit is, just right off the bat. But anyways, you can see that by clicking on here. Now you can also switch this over to graph to visually see what's going on here, okay? Because again, this is very important that you visually can see that this trade makes sense. This is what you're looking for, and kind of take a look at how much you're making or losing depending on what the price is. So the only bad thing about this, of course, is this is only showing you on the expiration date, right? What happens on the expiration date. But it's still better than nothing. And this does make sense for what we're doing, right? Because again, remember, call debit spread, it is a bullish strategy. And this is telling me that if Facebook starts to go up, that's when I'll make money, right? And in fact, it'll tell me that, as long as I'm above 362.50, I'll actually make my max profit of about, $65 here, it looks like. So remember, what you want to happen here, like we mentioned before, is that the price of Facebook on the expiration date is above the strike of the call that we're selling, which is 362.50. That's where we're making our max profit. If it's at 362.50 or above an expiration, we make our max profit 65. It can drop all the way down to, it looks like, our break even of 361.85. And then if it goes down to 360, we lose some money. And then on expiration, if it's under 360, which is the strike of the call we bought, that's where we lose our max loss, which here it's telling me about $185. So again, this does give you a visual here, and then it gives you the same thing over here, right? Again, you can change the width, you can change your strikes, expiration, you can change this from a limit to a market, number of contracts you want, change your limit price or whatever. So ultimately, after you're okay with what you set here and what you're seeing, you would go ahead and place your order here. Now again, this doesn't really give you the best of visuals, so what I would recommend is that you go ahead and use the option strat to actually visually see what's happening. So I just want to quickly show you that here. So option strat, again, very great tool to visually see what's happening. So go to build, and then again, this is called the bull call spread, which is right here. So we would go in here, we would do ticker symbol Facebook, which is right here. And you should do this before you enter the trade, by the way, because you want to make sure that visually it looks like what you want it to look and things like that. And so again, remember, we went ahead and we bought our call at the 360 strike. We sold our call at the 362.50 strike. And so this is kind of what it's looking, right? We're paying a debit of 190, very close to what I had of 185, whatever, which is our max loss, and then our max profit 60, which again is very similar to what we had seen over there. And then again, great thing about this, it lets you see before the expiration date kind of what your profit would be depending on the date, depending on the price of Facebook. And of course, you can also modify volatility here to see what happens when volatility changes, right? So again, always use the option strat before you ever enter any options trade. But anyways, guys, that is how you enter the call debit spread on Webull. If you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. I hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.